Hi grade 12 students. So in today's video we are going to do the first video of term 3. Okay, so remember guys, term 3 you are only going to do 2 chapters in accounting. Chapter 1 it will be VAT and chapter 2 it will be budgeting. Okay, so you're going to write a control test around August, and after that at the end of the August you are going to start with your trial examination. So you guys, you no longer have time anymore. Let's keep pushing, let's keep studying. No time to rest anymore guys until you finish your exam in November, because otherwise guys, you will regret forever. I'm telling you, grade 12 results, they are very important. Okay, let's introduce this chapter of VAT. I just believe that you guys, you know what is VAT. VAT is one of indirect tax that everyone pay. When you are buying a goods normally include tax unless it's zero rated items like a loaf of bread, brown bread, not white, brown bread, maize meal, they are zero rated. Okay, and some of the items they are exempted from VAT like a petrol. Okay, now okay, some things I will explain here when we are doing question, but otherwise after this video you're gonna know every basic that you need to know. So in this question paper guys, normally VAT they combine it with reconciliation. Okay, so VAT is 15%. That one you know. Okay, in this question paper they say that explain why the government implement VAT in South Africa. Why government introduce VAT, guys? Without VAT, how were you going to know? How were you guys going to know that? How were you guys going to? How were you going to be able to go to school? In other words, I'm sorry guys, something disturbed me, but the reason number one is that the government is collecting cash of VAT because they want to maintain their expenses. Government have a lot of expenses, guys. Let me try to write them down. Number one, a social grant, guys. Without a social grant, most of the people were not going to survive. But government only be able to get this cash through what? Through tax. Okay, to maintain a road. Guys, you think an individual can do a road? No one was going to care about that. Caring about hospital, caring about school, everything, most of them they are built by the government so that citizen can enjoy. Okay, that's the other reason why government implemented VAT. Okay, and the other question, guys, explain why some products are zero rated, guys. In South Africa, not everyone who have cash. It's not everyone who have cash who can afford everything. So which means that government have to meet other people halfway, like those who can't afford, poor people. So they introduce what we call zero rated, so that a product like a maize meal, like a loaf of bread, brown bread, they won't be too much expensive, because otherwise other people were not going to afford eggs. So they have to be zero rated. They don't have to include a VAT of 15%, because some people they won't be able to do it to afford and survive. Okay, that's the reason why we have a zero rated. Okay, the other question says calculate the amount of payable to SARS in respect of VAT for the 2 months ended 30 April 2021. Guys, before we start with this question, I have to explain something here. Okay, you must understand what is VAT input, what is VAT output. Okay, guys, VAT input and VAT output is not the same thing. Ne? When we talk about VAT input, it simply means that us as a business, we are claiming money from government. We are claiming cash from government. Why are we claiming? Because we have lost money, or we make a purchase. When we make a purchase or we have done outflow, the money goes out, or we didn't benefit. If there was no benefit on the transaction, no benefit, guys, just know that this is going to be VAT input. Okay, then the other one is output. Output is when we receive cash. If we receive cash or we sell, okay, let me use sold, or we have sold item, or we benefited. We can benefit, guys, in a different way. Like if a supplier gave us a discount, we benefited, which means that we have to pay output. Once we receive cash is output, because output is liability. Okay, this one is liability and this one is an asset, like that. Okay, now because you know this, it's going to be simple for you to calculate VAT control account. VAT control account contain input and output, and it will look like this. This is T account, where we have a debit and credit. On the debit is input, on the credit is output. Okay, remember, no benefit this side, no benefit is input, benefit is output. Let me give you example. Total sales, we have received money, we benefited, output. Purchase of trading stock, no benefit because we purchase, money is gone, input, no benefit. Okay, discount allowed to debtors, we give a customer a discount, we didn't benefit, guys. Again, we give discount. Once you give discount, which means that that discount amount is not going to be paid, which means that no benefit. Okay, and so on and so on. Okay, now the other question is, which amount do we include here, guys? We include only amount of VAT. Don't include inclusive and exclusive. If VAT amount is not given, you must calculate it first. Okay, total sales, VAT amount is not given, but we can get it by saying 412,000 multiplied by 15%, or you take 412 minus 473, you're gonna get the same answer. Okay, and yeah, here I have to be calculating. I know it's gonna take a bit time when I'm verifying this calculation, but it's worth it sometimes. 412,000 multiplied by 15%. This amount is going to give us 61,800. 61,800. Okay, remember, guys, under number A, they say balance due to SARS. We owe SARS, which means that if we owe SARS, is this side, output is liability, which means that our opening balance is this side, is 9,450. Okay, then the next one, we purchase. If we purchase, guys, this simply means that there was no benefit because the money is gone. If money is gone, you can't say, yeah, I benefit. Wow, how come? Because money is gone. Okay, we know that at the end of the day, we're gonna sell that stock. We're gonna say you benefited after you sold it, but when you are buying it, the money is gone. Okay, even here we have to calculate 230 multiplied by 15%. is gonna give us 34,500. No benefit. Discount allowed to data. We give discount to our customer. No benefit. And amount was given as 1,890. Okay. Then the other one, goods returned by the customer. If the customer returned goods, guys, did we benefit? Oh, we didn't benefit because the customer returned goods, which means that we have to give him his money back. So no benefit there. So it's no benefit, is input. Okay. Amount that we are given is inclusive. So here we have to say 19,320 multiplied by, we are looking for 15 over 115. Why 115? Because we are given inclusive amount, not exclusive. Okay. And it's gonna give you 2,520. Simple. Okay. Then the next one. Bad debts recovered, guys. We benefited because we covered money, we received money. Bad debts recovered, this side 1140. We benefited, we must pay something because we received money. Drawings of the traded stock by the owner, guys. Remember when we purchased the stock, we claim when we purchase. Why we claim? Because SARS know that at the end of the day we're gonna sell it and pay them. But we didn't sell that stock. The owner take it, which means that the owner benefited. It must come this side. When you buy this side, if you didn't sell it, we must reverse it this side. Okay, the owner benefited. Simple. Okay, and it's 138. The owner benefited. It must be paid to SARS back because we claim it first when we buy. Okay, and if you calculate this, guys, if you calculate this, you can just add everything this side and you subtract this side. Okay, and let's check, is it going to be payable or receivable? The total is 73,770, and we have to do even here 73,770, which means that liability is more than asset, which means that this is payable. This minus the rest is gonna give you the balancing figure here, which is 34,840, which is payable. Why payable, guys? Payable is because liability are more. This side, remember, is an asset. This is liability. If assets are more, which means that it's a receivable because it's in favor of assets. If liability are more, it's payable because in favor of liability. The more you have majority share, the more you are the more you have more share, the more you are a majority shareholder. Just like that. That's how we do it, guys. So I'm going to do the last video of VAT of part 2, guys. So, but guys, if you are watching this video when there's still a time, come and join our online class. It's only 100 rand. Whether you are rewriting or you are in grade 12, come and join in time, guys. Because if you just keep watching 1-2 video, 2 example on YouTube, and after that you just say that it's enough, guys, it will surprise you. Come and join, because we do many question papers that side. Some of them obviously we don't even record them. Okay, and also those who are rewriting, especially those who are rewriting because you don't get any study guide from anywhere, come and purchase our study guide, guys. It's only 100 rand. You will find many question papers like this and solutions so that you can figure out how the exam look like. Because in accounting they don't change much, but once they change something and you don't know, guys, it's gonna shock you. But otherwise, guys, I hope you learned something, and let's keep subscribing. It's also very important because we want to make sure that by November we are reaching 100,000. So it's possible, guys, if everyone is subscribing. I'm telling you, this will be the first South African YouTube channel that is recording accounting videos that reach 100,000, because we don't have yet. The channel who are making it, mostly they are science and in mathematics. So let's push it for accounting, so that at least we can have a commerce channel that is keep recording. Because guys, if people are not subscribing, not viewing, nothing, this channel was not going to exist. These subscribers that you are seeing, guys, they are the one who are pushing us to record more, because we can see that the students, they are looking for assistance. But otherwise, let's see on part 2.